Greetings, and hello to everyone. We are back with the March financial check-in with Dr. GMP. We are so excited about it. Hopefully, you have enjoyed the January and February financial check-in. Hopefully, you have made some changes to your budgeting, made some changes to your spending, and made some changes to your saving. So we look forward to, even if you would like to share those updates, we look forward to hearing from you on that. But today we are going to get into taxes. Yes, of course, that topic that people run from. Hopefully, you are not one of those people. And also getting into insurance. Insurance is something that a lot of people may not know the intricate details about, whether it is, life insurance, car insurance, and those things. But we're going to talk about that today. Okay, so we're actually going to take March and April to cover insurance and even trusts and setting those up. So we have a lot to cover. So stay tuned, get ready, get your pen and your paper together, get ready to dive into these conversations with Dr. GMP. And of course, if you have any questions, by all means, send an email to admin at the Titus2Living.com. Admin at the Titus2Living.com. And we will definitely have your questions featured on the show. Also, I'm making sure that her ticker at the bottom is scrolling. If you would like to connect with Dr. GMP, go to her website, drgmp.com. Go ahead and schedule a consultation with her because she will be able to assist you. She is the one that will help you eliminate inefficiencies that hinder success. So I want you to keep that in your heart and mind. Any inefficiencies that hinder your success, she will be able to help you iron those out. All right. So, Dr. GMP, how are you doing today?
I am doing well. I'm doing
Ah,
well. Thank you for having me again. How are you?
I am good. I tell you, I'm looking forward to this episode here on this show because the questions that came in were vast in number. Got several questions on this topic. So I really am excited about what you're going to talk about concerning insurance. And also, I did receive the email that you sent with the link. So I want to make sure we post that link as well. So I'll put that in the description somewhere and we'll get into that. But okay. But first, let's talk about taxes. We are in the tax season.
Mhm.
So, how should everyone, whether you have a business or personal, how should people start preparing for their taxes?
Start by looking at what you filed last year and gathering all that paperwork. Then there is like a standard checklist. So if you have anything new happening in your life, so if you had a baby, changed jobs, had a significant increase or decrease in your investments, just making sure you're tracking all of your year end paperwork that's coming in and making sure you're having that gathered and having it arranged so that your accountant or tax preparer can smooth that out for you. If you're preparing it yourself, then you just want to be diligent and just making sure, again, that you have all the documents because you don't want to file an incomplete tax return because then you have to turn around and do an amendment, which is not always fun.
Okay, so let's talk about for a few minutes here individuals that may not have accurately or successfully or completely tracked all of their spending and their expenses for the year.
Ultimately, that hurts you because as a small business or a LLC or an S corp, you need those expenses to offset your income in order to lower your tax bracket. If you're trying to position yourself, like if you're going to buy a home or you're positioning yourself business wise for a major purchase, that's a different tax strategy. So you may not want to completely lower your tax bracket. You might want to keep it a little higher to show that your business is doing well or improving over year. So it just depends on what you're trying to do will change your tax strategy. So if you're an individual person, whether you have a 1099 or you have an invoiced based business, um, or a W-2, just making sure you're tracking all those expenses and you're categorizing those properly, and then working with your tax preparer or your financial advisor to position you well for the tax goals that you're trying to achieve.
Okay. All right. So, what about individuals that do not know how to make clear separations within their categories? So, and give some examples of those challenges that you face as a tax preparer of individuals that have struggles with categorizing correctly their expenses and purchases.
Categorizing is pretty much it is what it sounds. So if it's a cell phone bill or a light bill, it's a utility. If it's gas, if it's parking, if it's tolls, then it has to do with travel. The categories, pretty much the IRS doesn't really dive into it as long as you're consistent. So, of course, you don't want to have food going into a travel budget if you weren't traveling at the time that you were purchasing that food. There's also limitations on how much food and entertainment that you can take because, in the 90s, people got carried away and they was doing all kinds of extravagant travels for fun things that were not necessarily business related. And so now the rest of us have to be more diligent because of those
Mhm.
actions. So, amen. It is what it is. But major categories is your travel, travel and transportation they can either go together or you can separate them. So travel would be if you have to get on an airplane, if you have to catch a bus, anything outside of your normal day-to-day vehicle that you would use to travel around in, like your personal car or a business vehicle. Um, Transportation would be anything having to do with parking or even your local metro bus, things of that nature. So they can be very broad or they can be very um, specific. It just depends on how your business runs and what makes sense to you. The key is consistency. Whatever you categorize as that transaction, then you want to keep doing that. You don't want to have it 1 month it's travel, and then the next month it's transportation, and then the next month it's something else. You really want to be consistent.
Okay, so before getting into deadlines, why would an individual switch categories like that from month to month? Let's talk about the parking. So, why would they switch categories over the course of a 3 month period with just that one item of parking? Why would they do that?
And I hate to pick on millennials, I really do. I see them
No.
more with millennials just because they are very much in the moment thinkers. When they're trying to do something, especially when they're getting information, if they're getting information, they want to use it right now. And so when they're making decisions and they're making the categories, it's based on what they're doing right now in their mindset right now. A month later, it might be different. And so that's how you get the different categories is you're an emotional category person, or if
Oh,
you're just a in the moment type of person. But you really want to be consistent. And that's where bookkeeping software and spreadsheets and things of that nature can help you. Because if you already see what's being categorized, then you just pick a category that's already there. You don't have to recreate something new.
yeah, yeah. Okay, that again, we're running into the struggle. This conversation can last the entire time that we're doing the show today. Okay, let's move on because I will get started right about now. Let's move on to this is, I tell you, it gets difficult. Let's move on to deadlines. What are the deadlines we're looking at for tax deadlines this year?
So if you have an S corp business or a corporation, those are all due March 31st or
Okay,
March 15th.
okay.
So the key is March. You really have until the 31st, but you really want to get it before the 15th. So if you haven't got your documents together or been in touch with your CPA or a tax preparer, you might want to get on that because it is the 4th.
Mm-hmm, mm-hmm.
Individuals and people who are filing a Schedule C for their business, you have until the April 15th deadline to get that in. So you have a little bit more time. If you are a more complex tax preparer, which you have both a business like and a W-2, and your regular 1040 that you're doing, your business portion has to be done by March 15th. So I tell my clients that if you have a business, go ahead and get everything together, and I can do the entire return before the 15th deadline. And that way, you're good for both deadlines. If you run out of time or life has come up, you can file an extension, and it's very easy to do. You can either mail the form in and do the form extension, or you can do it online.
Okay. Now there was something real quick. There was something that you had some of your clients fill out, and it dealt with business. So can you talk about that with that online form you had us fill out? I say us. Yes, I'm a part of that group. Everyone, go ahead. Thank you. Okay, thank you.
So that form, and forgive me, I'm forgetting the name of the actual form, but basically it is an IRS form to determine what type of business you are. And they're validating the actual company owner of that. So it's a really quick and easy form. You're just putting in your business information, and you're putting in who owns the business. And then there's supplemental information that you are submitting just to validate that. So what's happening is all these shell corporations and multi-leveled LLCs and all of that, the IRS is kind of flushing that out to make sure that if you open a business and you file an EIN number, that it's actually attached to a person and not a company, and there's not multi-layers. So it's been a big deal just because of all the parameters of who's supposed to file it and who's not supposed to file it. And if you go to my Facebook page, Dr. GMP, I have the links to where you can go. It's straight from the source, the Department of U.S. Treasury. So it's very dependable. It's not from a third-party source. It's right from the source. It's just basically trying to scare people to do the right thing. The IRS is getting, as criminals get crafty, the IRS is working to get even more crafty, just so that everybody stays on the up and up. And it's terrible that we have to work this hard to do the right thing.
Exactly. Now, is there a consequence for not completing the form, or is there a deadline for the form to be completed?
So for new businesses that started in 2013, they had until January. I didn't have any clients like that. Existing clients and existing businesses, they have until the end of 2024 to get that in. And the website does get backed up. So if you're not able to get into the link or finish the process, just try again, because it gets bogged down at different times of the day or different periods of the month, just for volume of people trying to get it in. But if you do have a problem, there are phone calls. There's a number for you to call to get assistance. And then if one of my clients or want me to help you with that, you can also reach out to me, and I'll be glad to support you, get that information in.
Oh, good. So what I'll do is I'll pull that link from your page, and I'll add it to the description as well, because those that do have businesses, some may not know about the form. And okay.
Yeah, they're not real clear about the consequences of not doing it. I have a feeling it would be more headache than it's worth not to do it than just to do it, because it literally takes 10 minutes. It's not that complicated. So just with the PPP loans and everything, they're just really doing a deep dive in and making sure that they're really validating what's going on in the business world.
Okay, and you're right. It did not take long at all. And one thing about that form, I saw that it had so many, the FAQs was really, really in depth. So it was, you had a question, the answer is right there. So very easy to fill out. So I am vouching for that as well. Yes, yeah, absolutely. So we want to help everyone that does have a business make sure that they do what is being asked of them, just to keep the record clear and all of that. Okay, all right. We've got to get going. We've got to be going. All right, let's talk about insurance. Let's deal with that. So we have several questions concerning insurance, and let's start with you explaining the major differences in life insurance policies.
So the major difference is you ask yourself three questions. The first one is, how do you want the money to be used? Are you paying off debt, or are you more focused on the quality of life for your surviving family? Once you answer that question, that rolls on to the next question. For what you're building the money for, do you want to build cash value? The answer is no. You just want a specific dollar amount. That would be like a term life insurance that's going to just pay out. You'll pay for your burial, you'll pay off your mortgage, or you'll pay off credit. It's just you pay the premium, and then after you pass, the insurance company pays that dollar amount to your family for that specific reason. If the answer is yes, then you'll have a different type of product, which is either like a whole life or supplemental life insurance plan. And basically, the difference between the two is the whole life and the supplemental, it builds cash value. So the insurance company takes a portion of your premium and they put it into the market and they grow it from there. And then the final question is, if you choose a plan that has cash value, do you need access to it along the way? So if you're in your 20s or your 30s and you're building cash value and you want to maybe use that cash value as a down payment on a home or for your child's college fund, or even to kind of kick off your retirement or business venture, that would be another way to do it so all of this requires long-term planning. Okay. So if you're not thinking 20, 30 years ahead, it's going to be a little challenging. Not that it can't be done. You just have to change your mind, wrap around it. So once you answer those three questions, that will be the type of policy your financial planner or insurance provider will steer you to.
Okay, so then what's the next step after that? So go ahead and pick one and let's kind of go through that whole process.
Okay, so for term life insurance, say you just want to bury yourself and have a nice little funeral and all that. So you just do your research, contact an insurance provider, and let them know, I just need, I guess the average cost right now for funerals is what, $6,000? Yeah. Mm-hmm. So say you want a $10,000 policy and you're surviving person to take care of you. Excuse me.
That's all right. It's all right.
So you want a $10,000 policy just to pay for your burial. You give them where you're going to be buried, the funeral home, and all of that. So you can either make the beneficiary the funeral home, so the money goes directly to them, or you can do it to a family member or surviving spouse and have them take care of it. Or you can split it. So if it's a $10,000 policy and you know your funeral is going to cost you $6,000 because you planned everything already with the funeral company, yeah, they can do that in the policy. They can write up the policy to say, okay, $6,000 goes over here to this funeral home, and then the balance will go, the $4,000 will go to my surviving spouse or whoever the beneficiary is.
What else would you have to say about just the term life insurance, and even if someone that wants to bury themselves and make sure that those expenses are covered?
Basically, it's all about future planning. What do you want to either take care of after you're gone, or who do you want to take care of after you're gone? And then you have that real conversation, not a delusional conversation, not a pie in the sky conversation, but a real conversation with whoever you're going to be partnering with to buy that policy from. So if you just want to bury yourself and take care of all your outstanding debt, student loans is a big one that people die with, mortgages, credit cards, things of that nature. Debt is wicked. So if life is not turned out the way that you had hoped and you were not able to take care of what you needed to take care of before you pass, because we don't know the day nor the hour. So if you are over the age of 18, you need to be planning for, how do I take care of all of my financial responsibilities that I decided to get myself into um, after I leave, so that I don't push that on somebody else, because there's a lot of movement towards that. Even parents, I experienced that myself.
Okay.
That when my father passed, the debt that he had, they tried to come after me for it,
Okay.
because they thought I had enough, liquid assets to do that. And I was, no, that's not what we're doing. And so that's another thing. As the survivor of someone who passed, even as a beneficiary, you have certain rights. So you need to understand those rights and say, yes, I want to participate with that, or no, I don't. So, but ultimately, each individual has to make a decision not to leave
Okay.
debt and other things on other people.
And it makes a good point. You make a good point there, because what I was thinking about as you were talking is, for you to address, and it's a mindset thing, and you know how it goes. It's a mindset thing where the individual hears, oh, I can have the insurance company cover my debt when I pass. Oh, I want them to do that now. Well, maybe I won't have to pay my bills. Pay off my debt while I'm still living. Because you know the mindset. You know the mindset. So talk about that in the name of Jesus.
That is a very immature mindset, and it's very short-sighted, because the insurance company has ways to protect themselves. It's not a blank check that they're trying to write. And what you just described as, well, I'm going to rack up a whole bunch of debt, or I'm just going to live my life and do whatever and then use insurance to pay it off. That's a form of fraud. So as you're getting into debt, you should have purpose for the debt, not only to get into the debt for a specific purpose, but to get out of debt with a specific purpose. And using a death exit plan, there's no purpose in that. That's not that should be plan Z of all the plans that you need to have in place. That's the last one. And so there's also time frames. I don't know how many times people have they were diagnosed with an unexpected terminal illness, and they did not have a lot of time, and they did not have insurance in place before then. So if you're diagnosed with a terminal illness, if you have your insurance policy within a year or within months of getting that diagnosis, the insurance can deny your policy and not pay. Same thing for medical insurance and everything. You can't wait until you have a pending cost that's astronomical before you put a plan in place. You have to plan ahead. Otherwise, it doesn't go well. And people, it's not a blank check. People are just not writing money just because you pay, $12.99 a month in premium. They're not doing that.
Oh gosh, that's such a good point. Okay. Don't get me started. Okay, so let's go into another question. Is there a difference in the type of life insurance that should be purchased for single individuals versus married?
No, it'll be the same types of insurance. And I'll just quickly just talk about the major categories. So
Okay.
insurance is, mix and match. You can create your own policy if you want to. But the biggest ones are term life insurance, which is just temporary. Again, you're buying it for a specific purpose. Whole life insurance, which is considered permanent, because again, you're building cash value over time. Universal life insurance, it's a hybrid of term life insurance and whole life insurance. So you can have a portion of it that's term that you can't touch, and then a portion of it where it's flexible and you can, build cash value and take money out if you need it. The next one is mortgage life insurance. And this one is what's called debt specific, where after you pass, it specifically pays off the balance of your mortgage so that your family has a place to stay.
Okay.
Burial life insurance, we just talked about that. It's like term, you're just buying it to bury yourself and your funeral expenses. Survivorship life insurance. So that's the one that's going to be, it behaves the same, but it's treated differently with married folks versus single. So with single folks, for this one, you have to determine who the beneficiary is. In a marriage situation, the survivorship life insurance is automatically the surviving spouse. But you should have a clause in there, should unfortunately the spouses die together, then there should be, either surviving children or next of kin. Two more. There's credit life insurance. This one acts like the mortgage. It's debt specific. So this is where the student loans and credit cards come in, that when you pass, they take care of those balances. And then supplemental life insurance is pretty much insurance that's a shared expense between you and whoever your employer is. Okay. So those are the main ones. You can have those whether you're single or whether you're married. The really only difference between the two is who's the beneficiary after the person passes.
Okay. What is the best life insurance? Okay, to the Lord have mercy. All right, the question that you just answered, the difference in the types of life insurance that could be purchased for single versus married. The next question is what is the best life insurance policy type for each? How deep do you want to go with that answer? Because it can get kind of.
Yeah, so that one, it depends on your personality. So you really want to go with a company that you can trust, that's been in business, that has a reputation. If you're going with a more mom and pop style company and don't want to do like the big Fortune 500, just make sure you have either a personal relationship or an in, to where the person who you're going to deal with, their integrity and their work history and their work ethic. There is a Forbes list that came out in 2023, which Ms. Joy is going to post a link to that. So if you're looking for a Fortune 500, that's a very comprehensive list by type of policy, and you can just point and click your way to happiness to research. But you really want to have confidence, again, to echo Ms. Joy, is that you need to have the reputation and you need to have the integrity and the experience. You don't want to be somebody's first time, not necessarily, not without having that relationship and reputation to back it. Because again, it's money and they're putting it into the stock market. And if they're not diligent or they don't have the work ethic to stay on top of it, then it's treated like monopoly money. And that's an unfortunate viewpoint.
Yeah. Oh, that's good. All right. So let's dig in just for a little bit. What is the best policy for building cash value? And I know you talked about this in the beginning, so we want to come back around to it. That can be utilized throughout the life of the policy for emergencies and or things like purchasing a home. So you did touch on it. So let's circle back to it and dive a little bit more into it.
So the two main ones are the whole life and then the universal life. But there are all kinds of policies. So every year the insurance company is coming up with ways to please customers. So they have a pool of customers, they're listening to their wants, needs, and desires, and then they're creating policies to fit those needs. Basically, when you're building cash value, it's like, well, not almost, it is. You're putting money into the stock market under somebody else's watch. So when you're picking a company, you want to have a company that has assets under management and has a good reputation for gaining more than they lose. So that's the ultimate goal of the stock market, is that you want to make more money than you lose, and you balance your portfolio to smooth out those ebbs and flows. But it's based on your tolerance. If you're a high risk person and you love gambling and you want to just see if you can hit it in the first 6 months, have at it. There is a policyholder that would policy company, investment company that would love to help you out. But if you're more conservative, there is a portfolio for that. So you really have to get with, I would say, a financial advisor. And most of the insurance company industry is made up of financial advisors. So there's somebody out there that can help you. It's just all about building that relationship and actively communicating your needs and staying in touch. It's not a set it and forget it. You really need to be talking with your financial advisors along with your tax preparers every year.
That's really good. Okay. So what about this next question? How does one go about, okay, well, that deals with trust. So let's touch on it just for a little bit. And then we will save that for next month's financial check-in. But how does one go about setting up a trust and placing assets, including their life insurance policy, into the trust?
So that's going to work with you can either get an estate lawyer, or you can go to an investment company or even a bank. So trust is pretty much, it is a bank account that is set aside for a specific purpose, and you set the terms, but it's not as stringent as a traditional bank account or a money market account, because it's really the policy grantors, what they call it. You drive the terms of what money goes in, how it's treated, all of that. So just asking questions, doing research. Again, you can go back to that Forbes list because a lot of those companies on there do trusts as well. Even your local bank is a place to start. They do have trusts. So that's a good place to start if you just want to interview somebody that's touchable, that you're more familiar with, and sit down and have a conversation with one of those wonderful people in the offices. The tellers won't be able to help you with that, but you got to sit in the chair, write your name on the paper, and wait in line.
Oh, absolutely. Okay, so I'm going to leave it there because we definitely want to come back next month and actually dive deeper into trust and circling back to insurance as well. We look forward to you eliminating inefficiencies that hindered your success. Until next time, stay praying, stay believing, stay Titus II Living.